after the financial statements have been prepared, the next step and the last step of the accounting process is to record the closing entries. Remember, we need to, in order to prepare for next accounting period, we need to close out or have zero balances in every revenue account, every expense account, and every dividend account, the dividend account. So I'm going to hide my financial statements, and I'm going to record my closing entries off of the information that I have in my trial balance. Remember that we have two revenue accounts, rent revenue and service revenue. I'm going to record a debit. Remember, revenue accounts carry credit balances. So to zero them out, I'm going to record a debit to rent revenue and another debit to service revenue. And my credit, remember, although we're transferring these amounts to retained earnings, we do it indirectly. We first record the credit into the income summary account. So my rent revenue balance was $1,500. I want to take that out, book a debit to rent revenue for $1,500, and I want to debit service revenue for $61,500. I'm shifting those amounts into the income summary, so I want income summary to be credited for the total, or $63,000. That's my first journal entry, to transfer my revenue accounts into the income summary account. Next, I want to transfer all of my expense accounts into the income summary account. Now remember that expense accounts carry debit balances, so we are going to credit the income summary account for the total of all our expenses. Now we need to close out every single expense account. We are going to close depreciation expense to each one. Remember, on our trial balance, we track each one separately related to our long-term assets, so the depreciation expense on the building and the equipment. Remember, in the income statement, we showed the sum of these two, but on our trial balance and the information that we're keeping for the company's internal purposes, we have separate accounts. So we are going to credit each expense because they carry debit balances. We'll remove the debit balances by recording credits to each one of these expense accounts. And then we transfer that total amount into income summary. So I want a debit in income summary equal to the total amount of all of these expenses. So I debit income summary for $33,300. Next, I'm going to transfer the balance that exists right now in the income summary account into retained earnings. So what is the balance in income summary? Well, we have a $63,000 credit booked here and a $33,300 debit booked here. So what is the net of that? It's going to be a debit. Income summary currently has a credit balance of $29,700. Of course, that's equal to our net income when we prepared our income statement. And that carries a credit balance. So let's book to remove that out of income summary. We're going to book a debit to income summary. Right before this entry, income summary has a credit balance of $29,700. Let's book a debit to income summary and shift that amount into retained earnings. So when we book a credit to retained earnings, are we increasing or decreasing retained earnings? We credit equity accounts to increase them. So we are increasing retained earnings for $29,700. Why are we doing that? We're shifting net income out of the revenue expense accounts and into the retained earnings account. What was the purpose of this income summary account? Why didn't we just credit revenue here and why didn't we just credit the total revenues into retained earnings here? And why didn't we just debit the total expenses into retained earnings here? This is just an intermediate step, and it's just a check figure to show that this amount is equal to our net income, and that's what gets transferred into retained earnings. And we have one more closing entry to record, and that's for dividends. We know that our dividends currently has a balance of $5,000 here. And that's for the last accounting period. For the new accounting period, we want that balance to be 0. So dividends, remember, carry a debit balance. So we are going to credit the dividends account for $5,000 to get that dividends account balance to be 0. And what account are we going to debit? It's not income summary. We only do that for the revenues and expenses. We immediately decrease retained earnings. Remember, when we debit retained earnings, we're decreasing retained earnings. So what was the net impact to retained earnings of the revenue, the expenses, and the dividends? $29,700 less the $5,000, so $24,700. That's the amount that we're transferring out of this period and into retained earnings so that we have an updated retained earnings balance for the next period. Now we're ready to start the next accounting period.